All right, everyone, a very good morning to all. It is 13th of September 2024. Now, let's quickly have a look where we are right now as a sentiment point of view, or let's just say where the things right now sitting at. Starting with the FX space, it is clearly showing us that there is a risk of environment currently going on in FX space, with the yen and Swiss franc leading the pack, and the Antipodeans, Aussie and New Zealand is currently down by -3 and -2%. Uh, Moving forward to the equity section is pretty much consolidating. We are not having a major drawdowns in the except the Nikkei 225. Other than that, if we just hide that, there is not much going on in equities. If we just take a look at the equity perspective, there is no clear bias. Either we are sitting in a risk off or risk on. It's just neutral in equities. Moving to the bond section, yields are pushing lower, which eventually leading us to a risk off environment. Just currently we had a US imports data. Let me just bring it up for you. So there isn't much of the deviation we can see in the data. It's just that export prices fell -0.7%, and the expectation was -0.1%, and the import prices are down by marginally -0.1%. So this data doesn't give any much of the clearance to go dollar down. However, the major comments we had from the comments was right here. Okay, so yes, so if we look at the Fed watcher Timmy Ross, where he noted that it could be a close call between 25 to 50 basis points, and while the former member Dudley said he would push for a 50 basis point if he was still on the committee. So what does that mean? That means that there is a currently market has been pricing in for 25 basis points of cut, but there is a little bit pricing in for 50 basis points of cut for the next upcoming meeting. And uh, and the the Dudley, who has been the former FOMC member, he said if he could have been in the committee, then he would voted for the 50 basis points, which can eventually lead to sell off in the equities, because 50 basis points gonna be an emergency card, which eventually gonna give the sense to the market that the Fed is behind the curve. So that is the problem. If they do emergency cuts, it's gonna be negative for equities, because Fed the market all over the place, they're gonna think the Fed is clearly behind the curve. That's why they're trying to push the throttle so that they can cover up cover up the distance they are behind. So 25 basis points is gonna be pretty much cool move if they do, and the higher probability that they're gonna do 25 basis points of cuts. So now let's move back to the graph. If we look at the commodity section, copper is down marginally, but not. Gold is pushing higher. If I just give you a look here, it just has broken that all-time high, is currently up and still trading at 2,575. So there is no technicals over here can be drawn, because we don't have any major, but we can draw a trend line over here if I may. That has been also got broken. Now with that being said, uh, after the US import and export data, we're gonna have another one coming at 11 a.m. Atlantic Standard Time, and that is the Michigan Consumer Sentiment Index, with the 5-year consumer inflation expectations. After it is pretty much snoozer, because we don't have any major event to focus on. All eyes gonna be on the next week, with Bank of England on the board, FOMC on the board, and also Bank of Japan, with the currently my market is pressing in with hold. on Friday, and all eyes, as I said, gonna be on the major event on the FOMC. That what guidance they give us on their statement, and also in the presser what Jerome Powell has to say about the dollar right now. So with all being said, it is kind of a risk off environment if we look at the bond market, if we look at the FX space. However, equities are not giving us a clear bias, and from a macro event point of view, don't hesitate to let me know. Thank you, traders. See you next.